Tai Zen. He is CEO and founder of cryptocurrency.market. So Tai, welcome to Strategic Investor Radio.
Thanks for having me here, Charlie.
So Tai, we have a subject of significant interest and importance here today. Cryptocurrencies. Now, those are two words that had not been put together until a few years ago. And until the past few weeks, the words of Bitcoin, Ethereum, Litecoin, blockchain were not part of the nomenclature of investments in the United States, but they have quickly become the talk of the day. I was at a conference for hedge funds here in California last week, and I probably talked to about a dozen of these hedge fund people at different times. 3 of them brought up Bitcoin, cryptocurrencies, blockchain. I had never heard those things at an investment conference before. And now I had 3 people out of 12 talking to me about it. So
and now you have the most popular cryptocurrency investing channel on the internet on your radio show.
We're there. So Tai, tell us why we're talking about Bitcoin, Ethereum, Litecoin, blockchain these days.
Okay, so just so that your audience knows, the cryptocurrencies and blockchains are a new type of asset class that has been created since 2009. The first person to create the first cryptocurrency, his name was Satoshi Nakamoto. I say he, but we don't really know if it's a he or a her or a group of people, right? But they released the first cryptocurrency is called Bitcoin. And when after Satoshi released it to the public, it's been growing since 2009, and it has grown to become, based on what I have researched, is the world's highest growing or fastest growing asset class. Cryptocurrencies is a new asset class because we typically, when we think of an asset class, we think of stocks, bonds, gold, commodities, things like that. And so cryptocurrencies are an entirely new asset class that has been created since Satoshi Nakamoto released the first one, which was called Bitcoin.
So, it was interesting. I think there was more entertainment value in 2009 when that came out, and everybody seemed to be questioning who is, Satoshi. Okay, and supposedly I remember seeing some program where they showed a door, and behind that door, this is where Satoshi was, or the group of people, whoever it was, and then it went away.
Yeah, so up until this point in July of 2017, nobody knows who Satoshi Nakamoto, the original inventor or founder of Bitcoin, is, or who the group of people that created is or are. Okay, so if anyone tells you that they know who it is or anything like that, they're just bogus. They're fake. They're not real. There's only one way. Well, there's like 1 or 2 ways to prove that you are the original Satoshi Nakamoto. You would have to actually move one of the million Bitcoins that is owned by him or her.
Oh, really?
Yeah. So the original Satoshi, the original founder of Bitcoin, so based on the research that all the cryptographers and all the cryptocurrency enthusiasts and engineers and scientists have done, they estimate that he has about 1 million Bitcoins that he owns or he is in control of, and then none of them have been moved.
I see.
So that's why people are really fascinated by who he is, because why is it that this guy has over $1 billion worth of cryptocurrencies and he hasn't moved one of them yet to cash it out into the euro or the US dollar or the yen or anything like that?
Yeah, he's saving it up to buy a house in Silicon Valley.
Oh, yeah?
That's what he's doing here.
I think he has enough money right now to buy up several blocks in Silicon Valley.
Barely. Okay, so, but then Bitcoin went away as a subject. And then it was just like a few weeks ago, Barron's Magazine had on their front cover this big Bitcoin, okay, and they had a feature article on it.
Well,
but before that, I hadn't really, the investment world had not heard much about it. So why is it that all of a sudden there's this eruption about cryptocurrencies, blockchain, etc.?
Well, here just to clarify something, right? It's in the mainstream media, it's new. right? It died down. Bitcoin has had like 5 or 6 multiple booms and busts. So it's went through like half a dozen bull markets already, and Bitcoin itself, we are experiencing the biggest bull market right now in human history with Bitcoins and Ethereum and multiple other cryptocurrencies. We've never had a situation in human history before where something grows 1,000,000%, 2,000,000%, 5,000,000% in its lifetime, and this has happened with Bitcoins and multiple cryptocurrencies since 2009. So it hasn't been that long, right? When we talk about a stock such as Dell Computers growing 1,000 or 5,000%, that took like several years, a decade or so. But when we talk about cryptocurrencies, for example, like in 2016, one of the best performing cryptocurrencies is one called Monero, and that grew over 3,000%. In 1 year.
So 3,000%. It went from what price to what price?
It depends upon how you look at it, from because the cryptocurrencies you can price it in what's called satoshis, which is the smallest unit of that. Like the U.S. dollar, the smallest unit of a U.S. dollar is called a penny or 1 cent, and there's 100 of them. Well, the smallest unit of any cryptocurrency is divisible to 100 million units. And that smallest 100 millionth of a unit is called a Satoshi in honor of the founder of the first cryptocurrency.
Okay.
So
so
whenever you read the numbers, just so that your audience doesn't get confused, they are going to see 8 decimal places, and they're going to see it, and they're going to that's the easiest way to read it. So, for example, if you look at Dogecoin right now, it goes out to 8 decimal places, and it has a 75 at the end of it. You would read that as 75 Satoshis.
Okay. So we're too far in the tall weeds here, right?
Okay.
Let's back up.
Okay, back up. Let's rewind
because
here.
our audience is not going to be that familiar with this. So
Yeah.
let's start at the very beginning.
Okay.
What's a cryptocurrency?
Okay, so let's
and give us examples and kind of stories that we can relate to in terms of U.S. dollars, euros, that kind
most
of thing.
definitely. So the impetus or the motivation for Satoshi Nakamoto to invent a cryptocurrency in the first place, he's not the first one to attempt to do this, okay? We live in a time in human history where we can broadcast this radio show live by audio or video to someone else on the other side of the planet, and we can do it for free, and we can do it in real time, okay? We can send pictures, we can send emails, we can stream a lot of data to the other side of the world for free in real time at 0 cost, okay?
Right.
Or at least 0 cost to us, right? To the end user. However, the only thing that we cannot do that with is money, with currencies. And Satoshi Nakamoto and a bunch of other scientists, computer scientists, have always tried to figure out how can we make a currency or an electronic cash system that we can send to somebody else on the other side of the world. How is it possible that I can send you an email, an audio, a video, but I can't send you a currency without going through a middleman such as a Chase Bank or a Bank of America or an HSBC bank? There's always a middleman that has to get in the middle, a trusted middleman, so we have to use a bank where I send money to the bank and then the bank forwards it to you, or vice versa.
And then there's a cost and a delay for doing that.
Exactly. There's a transaction cost and there's a delay and there's all kinds of fees that they collect as a middleman, and they really don't provide a real service. They just get in the middle and collect fees because you and I don't trust each other to send the money, so we have to use a trusted middleman.
Okay.
And so Satoshi Nakamoto and many other computer scientists have always tried for years now to figure out a way to where we can create an electronic cash system that we can send to each other. The problem that they ran into was that if I tried to send you an electronic money, I can copy and paste it and send it to a second person and a third person. And that was the problem, and that problem is called a double spend. So if I send you a photo of my dog, right, Buddy, I can send you a photo of my dog, and then I can copy and paste it and send it to a second person. So if we were to create a digital currency on the internet, what is going to prevent someone from copy and pasting it and sending it to another human being? That was the computer science problem that no one had figured out how to eliminate. And Satoshi Nakamoto was the first computer scientist to come along, and he figured out a way where you and I can send electronic cash from one person to another person without a trusted middleman, and know that I could not have sent that same dollar or that same Bitcoin to you and then send it to a second person.
Okay.
And the way that he did it was ingenious. He didn't come up with any new technology inventions. What he did was he took existing computer technology and he created it. So if you look at how a bank works, right? When I send you a $1, Charlie, the bank, if I use Chase Bank, for example, right? They go into Chase Bank and they have an accounting ledger, and they take out $1 from my account and they add $1 to your account.
Right.
You agree?
Yeah.
Okay, so the only person that can add or remove or debit or credit that accounting ledger inside Chase Bank is Chase Bank itself.
Correct.
Correct? Okay, so what Satoshi did was he took that ledger and he made it public.
Okay.
He made it public
Okay.
so that everyone can review it and audit and check it and review it to make sure that when I send you $1, I actually have $1 to send you. So if I send you a Bitcoin, right, I actually have a Bitcoin in my account to send it to you. And the way that he prevented a double spend was that he gave a copy of that ledger to everybody. So right now, Chase Bank has their private ledger, right? So no one can access it except for Chase Bank, and no one can modify it except for Chase Bank. But this public ledger, right, everyone has a copy of it, and everyone can review it. And that's why the Bitcoin ledger public is called a public ledger, because it's anyone can go and download a copy of it. All you have to do is download the Bitcoin software onto your computer, and the minute it downloads to your computer, it can request the network, the internet, and then other people with copies of it will send you a copy of the entire ledger since 2009.
Okay.
Right?
Okay, so moving along here, because again, at this point, our listeners are not that concerned about all of the details.
Okay.
What gives Bitcoin value?
The network. The people are using it. So it's just like the U.S. dollar, gold, silver, or anything else that has value. What has value is the people that are using it. So whenever we give it value, a piece of gold, we give it value because you and I agree that it has value. If no humans agree that it has value, then it's worthless. Right? So people agree that this Bitcoin, this digital currency, has value because they know that it's scarce and it cannot be counterfeited and it cannot be duplicated, and you cannot have a fake Bitcoin. There's no such thing as a fake Bitcoin. As long as you use the Bitcoin network, there's millions of computers out there that are going to verify to make sure that it is a real Bitcoin. So you cannot introduce a fake Bitcoin into the network.
So there's no counterfeiting of Bitcoins at all?
No, it's the most counterfeit-proof. And the reason why we know that is because right now the entire Bitcoin network is worth $37 billion, right? As we're speaking right now. And if you try to introduce a fake Bitcoin into it, the network will reject it.
Okay. So we know that there's been a tremendous surge in the value of Bitcoin. So Bitcoins have a value based upon supply and demand.
Yeah, right now it's worth $2,306 as we're speaking.
Okay, so $2,306.
Yes.
Okay, and it was
up to over $3,000 it was up to $3,000 in the U.S. and slightly past that in the low 3,000s outside the U.S. In countries that was harder to get to move money around, like in Korea and China. It's harder to move money in and out of the banks and stuff and the exchanges. That's why their Bitcoin prices were higher than ours. Okay,
and Bitcoin a year ago was what, 1,000?
Last year it was like around. If I remember it correctly, it was around $400 or $500.
$400 or $500.
Yes.
So it's had one heck of a run in the last year, and that's what's gotten all the attention here.
Yes, because it's the highest growing or the biggest growing asset class in compared to like the traditional stocks, options, forex, futures, commodities.
Okay, so an individual can buy a Bitcoin or a portion of a Bitcoin.
Yes.
Okay, and we're not going to go into detail about that, but that's possible.
Yes, a Bitcoin is divisible into 100 million units.
Right.
So you can buy, 10 million units, 100,000 units. But if you buy 100 million units, that's called one Bitcoin.
That's called one Bitcoin.
Yeah.
Okay, and so people can buy these.
Yes.
And it will have adjustable prices. It adjusts all day long.
Yes, it moves. And the difference between the price of Bitcoins versus the price of a stock or a commodity or a forex currency pair is that it's a true 24-hour market. So in the forex market, in the futures market, there's still time where they have to stop and clear and settle the transactions. in the cryptocurrency, the transactions settle near instantly.
Okay.
Not instantly, but near instant.
Okay.
So the markets don't have to shut down to clear transactions
Got
to
it.
settle.
So what would have to happen, Tai,
Mm-hmm.
for Bitcoin value to go to zero?
More than likely, it will not go to zero because the lower it goes, that's like saying the U.S. dollar will go to zero. It's extremely difficult for that to happen because
Okay.
there's millions of users, and
Okay.
you cannot go out there and tell millions of users around the world
That this is worthless.
that this is worthless because there are people who missed out when they knew about it when it was $2, $5,
Yeah.
$10, $100, $1,000,
Okay.
and it's not gonna. If it drops that low, there'll be such a big rush of people buying
Right.
into it. Like for example, if it ever
Yeah.
drops to like when I first heard about Bitcoins, I bought my first Bitcoins at $160,
Okay.
right? And I put all my life savings into it. And if it ever drops down to 100 or 200 or 300, I will continue
You'll
to
do that again. Okay.
And then many of my friends
Okay.
and many investors I know will do that. So the
Okay.
likelihood that it will go to zero, if it goes to
Because
$1,
of supply and demand.
yeah, I mean,
like currency.
yeah, if it goes down to
Okay.
$1, I'll mortgage my house and put it all
Yeah.
in Bitcoins.
Okay.
So
So how do you know that there are millions of owners of Bitcoins?
because you can go, remember, Bitcoin is a public ledger. So when you go there, you can look at the accounts of all the accounts, and you can see how many accounts are created every day. You can see all the transactions that go from one account to the other. It's a public ledger, but it's pseudonymous, meaning that when I make a transaction from Tai and I send one Bitcoin to Charlie, you see the transaction occurring on the public ledger, but you don't know that it's from Tai to Charlie. You only see
Okay.
a long string of numbers.
So there are no
and letters.
privacy issues here.
There's privacy, and the privacy can
No
be
privacy issues.
No. Like it's not like when I send the Bitcoin to you that someone can go there and see that I
Hey,
sent it.
Charlie just got all these Bitcoins.
No, they won't. The
here.
only way that they would know is if I reveal that was me who sent it to you, and then you reveal that it was you
Okay.
who received that Bitcoin from me. Otherwise, as long as we keep it private between us,
Yeah.
no one would be able to figure that out. It would take some really heavy-duty forensics to be able to read through the blockchain to figure out that it was me
Yeah.
or you.
Tai, I hate to say it, but we need to take a quick break here.
Okay.
This has passed like it's been 30 seconds here, and it's been 18 minutes. So this is beyond fascinating here.
It is.
It really is. So again, we're talking with Tai Zen of cryptocurrency.market. You're listening to Strategic Investor Radio on OC Talk Radio in a fascinating conversation. When we come back, we're going to talk about the competitors to blockchain, the competitors to Bitcoin, and what blockchain is. Okay? We'll be
Okay.
right back.
According cryptocurrencies.
Thank you, Paul. Again, we're talking with Tai Zen, founder and CEO of cryptocurrency.market. And we've been talking about Bitcoin. So let's move into blockchain. They're often used together. What is blockchain?
So a blockchain, as I mentioned earlier, Bitcoin operates on a public ledger technology, and every 10 minutes, the public ledger gets updated with new transactions and new data. So that 10-minute is referred to as a block of data. So that block of data gets added. The network agrees on what the transactions that just happened in the last 10 minutes were, and it's not the exact way that it's done, but just think of it as the latest transactions get put into a block of data that's 1 megabyte, and then that block is added to the public ledger, and it creates a chain, right? So that
Okay.
anyone can go back, and that's why it's called a blockchain, because one block is connected to the previous block, which is connected to the previous block, which is connected to the previous block. So it makes it extremely difficult for you to counterfeit it, because in order for you to counterfeit and go back to the last 100th block ago and try to change the data or the transactions in there, it won't work, because it'll mess up the blocks, and the rest of the network will recognize that it doesn't match up.
Okay.
Okay.
Now you keep talking, Tai, about this network and that they keep track of these things.
Yeah.
They keep, the transaction records. What's their incentive for doing this? Are they being compensated by someone?
Yes, the network automatically compensates them. So the way that the Bitcoin network works is that when you create a new currency, someone has to mint the new currency. Someone has to create it out of thin air.
Right.
Like with the fiat currency, such as the U.S. dollar or the euro, the central banks create that.
Right.
The Federal Reserve creates that in the U.S., right? So in the world of Bitcoins, when Satoshi invented the network, he realized that if he was the one that minted all the new Bitcoins, people would think that it's unfair. So what he did, and another problem that they had was someone needed to secure the network and make sure that hackers don't try to hack the network.
Right.
So what he did was he incentivized people like you and I to volunteer our computers to secure the network. So there are thousands and thousands of people around the world that are volunteering their personal computers and their servers to secure the Bitcoin ledger and the network, to make sure that hackers don't try to hack it and change the data in there. And by doing so, every 10 minutes that they do that, the one that secures the next block of data, that 10-minute block of data, they get rewarded
with Bitcoin?
With Bitcoins. And that's how the new Bitcoins are minted. It started out as 50 Bitcoins per block, and then every 4 years it cuts down in half to 25, and now it's at 12.5 Bitcoins. So if you volunteer your computer to secure the network, and it finds the next block of data, you get rewarded 12.5 Bitcoins, and you multiply that by the current price of $2,300, and that's close to $30,000,
okay,
something like that.
I see.
For volunteering your computer to secure the network. Now, that's not easy to do, and I don't want your listeners running out there buying computers to secure the Bitcoin network, because that takes a specialized hardware and software engineer to do that. Don't do that.
Okay.
Right? If you're listening to this show, you're not more than likely you're not qualified to go do that.
Right.
Yeah.
Right. Okay. Now I understand. Back to Bitcoin for just a minute,
okay,
because we didn't cover this point. I understand that the number of Bitcoins to be created has been fixed.
Yes, it's fixed at 21 million, and it will be minted over from between 2009 until the year, I think, 2140.
Okay.
So there's a span of time where the majority of the Bitcoins will be minted within the next few years, within the first 10, 20 years or so.
Okay.
And after that, it's going to trickle out. And since each Bitcoin is divisible by 100 million units, it doesn't really matter if you have 21 million or a billion Bitcoins, because you can always divide it out.
Right, right.
Into smaller units.
But that means, currently, right now, the U.S. dollar, for the past several years, we've just been printing more.
Yeah.
Okay, and the U.S. dollar has declined in value, partially because increased supply.
Yes.
They print more all the time.
Exactly.
That's not the case with Bitcoin.
And the reason why the price of Bitcoin is going up steadily, massively, not just steadily, but massively since 2009, is because there's only a finite number of Bitcoins created. So out of those 21 million Bitcoins that will ever be created, I think about 14 or 15 million of it has already been minted, and it's floating out in the markets right now. So the only way to get a Bitcoin is to buy it from another person, or to buy it from another business, or to acquire it, or to perform a service to acquire it. And so because of the limited number of Bitcoins, the price only goes up. It's the first time we've had an appreciating currency and not a depreciating currency.
Yeah, at least in modern world.
Yeah, in modern world. So that's something that people are not accustomed to, because everyone's used to the Fed printing more money and diluting the buying power of our U.S. dollar.
Yeah.
And they're not used to seeing a currency where it actually increases in value because more people are using it.
Okay, so let's move on to the competitors of Bitcoin. Okay, so this is not, they don't have a corner on the market. Okay, this is not a monopoly, and I understand that there are like over 800 Bitcoin competitors. Ethereum, I guess, is the most well-known. There's also Litecoin. Tell us about that.
Okay, so in the world of blockchains and cryptocurrencies, Bitcoin is the granddaddy, and it was the first one. But you and I both know that when someone comes out with a new technology, someone else is going to jump on board and clone it, copy it, and try to make a better version of it. So Bitcoin was the first one, first cryptocurrency, but it's not the only cryptocurrency. Like you said, there's like 811 as we're speaking right now. And the other cryptocurrencies are trying to do the same or a better job. They all feel that they can do a better job or be a better form of currency than Bitcoin.
So it's like somebody copied Yahoo and Netscape and Earthlink.
Exactly. You know, like in the past when MySpace and Friendster was the first social media. Then later on, Facebook came along and dominated and took over because they had a better product, a better service, and because of that. When you mentioned about Ethereum, that's the second most popular cryptocurrency by market cap and by trading volume. So there are some that have a bigger market cap than Bitcoin. Well, not a bigger market cap, but they have a big market cap, but they have very low trading volume. So whenever we talk about Ethereum, they do have the second biggest market cap and the second biggest trading volume as of right now. And so far, Bitcoin appears to be losing its dominance. In other words, there's other competitors that are coming up that are gaining traction, gaining trading volume, and gaining market cap.
And of course, this is a worldwide phenomenon.
Yes.
This is not U.S.
No. It's the first time in human history where we have an international currency. So we have an international currency that is accessible by any human being that has a smartphone, a computing device, a tablet, anything. So Bitcoin, for example, like there's countries where they don't want you to use the U.S. dollars. Even though it's being used, the government doesn't want it. But Bitcoin, you cannot. It's a permissionless cryptocurrency. Which
you
means
don't have to get permission.
You don't
from
have to
anybody.
get permission from anybody. Anyone that has a computing device can access the network and use it. So there's no. You don't need the bank's permission, the government's permission, and the libertarians were actually the first ones to adopt it. And it's interesting because my home is in Dallas, Texas, and my other co-founder, LeonFu.com, is also from Texas. He's from the city of Austin, and it's funny because the majority, a big portion of our audience, all right, we have the most popular cryptocurrency investing channel on the internet, and a large portion of our audience comes from California. From where you guys are based out. We have a lot of libertarians out here in this area, so we have a big California audience on our channel also.
Yeah, I want you to know, Paul is not among those libertarians. He's not there. Yeah.
But they were the first ones to adopt the idea of cryptocurrencies because it allowed people to freely use it without permission or borders from anyone.
Okay. So, Tai, we're just about out of time here.
Okay.
What does someone do who was interested in learning more?
Obviously, we have the most popular cryptocurrency investing channel on the internet. And I would say that one of the things that they can do is visit our site at cryptocurrency.market/newsletter and subscribe to our newsletter. And we always put out, we don't have a set schedule like you guys do. We're full-time Bitcoin and cryptocurrency traders and investors. That's how we pay our bills and make our full-time income. And so because of that, we don't make videos on a we do it on a consistent basis, but there's not a set schedule.
Okay.
So that's one place that you can. And then we also have when you listen to our channel, we talk about other channels too that are very popular. There's one thing I will warn you is be careful when your audience goes out there and does research on it to make sure that if they're interested in investing, listen to the cryptocurrency investing channels because there's two major groups of people in the cryptocurrency world. One is the technologists. They're just worried. They are more concerned about the technology behind Bitcoin and cryptocurrencies. And then there's the other half, which is like myself and our channel, which is more focused on making money from cryptocurrency.
Okay, so there are places where one can buy Bitcoins, Ethereum, etc.
Yes.
And those places are identified on your site.
Yes.
What's one of them as an example here?
Okay, so one of them, if you want to convert your U.S. dollars into Bitcoin or Ethereum or Litecoin, the most popular one in America is a place called Coinbase.com.
Coinbase, B-A-S-E.
Yes, it's spelled just like you hear, Coinbase.com. Full disclosure, we do not work for them. They did not pay us to say that or anything. They're just a reputable exchange out of the San Francisco, the Silicon Valley area. The New York Stock Exchange put like $75 million, if I remember that correctly, into them, invested into them. So the New York Stock Exchange is a big, I guess, a controlling partner or shareholder. I don't know how that works, but they put a bunch of money into Coinbase.
I see.
So that's one. The exchanges that we suggest are on our website, www.cryptocurrency.market. In the FAQ, I would warn your listeners that if they're doing research on this, we have a list there of the reputable exchanges that we have done business with and transacted through, and make sure that they follow the correct hyperlink, because in the world of cryptocurrencies, it's extremely, the security is still something that's extremely necessary, and there's a lot of hackers out there that will put up a fake website that looks just like the real website, and they'll tell you to send Bitcoins to them, and it's a bogus website. So that's why we put on our website, FAQ, the correct website name and the correct hyperlink, so that they know where to go to, just for security reasons.
So, my only regret is time is up and we need to move on here. This has been fascinating.
Yeah.
Thank you very much for taking time out of actually your vacation to come in here into the studio and meet with us. And we really, really appreciate you being here.
Yeah, no problem. Let me know if you guys have any questions, and we'll come back in the future. All right?
Okay, so again, we've been talking with Tai Zen of cryptocurrency.market about a fascinating subject that we will certainly be revisiting in the future. And you've been listening to Strategic Investor Radio on OC Talk Radio. And I'm Charlie Wright, wishing you an enjoyable week and productive investing.